Okay, this is Brother Watkins, and this is a video on homework number 4, which I originally said that I was going to do, but the dates that were provided earlier went through the end of the year, and that made it unnecessarily difficult. And the object of this is to teach you how to do bank reconciliations, which is the last skill that you need in order to take your final. So what I'm going to do is just do a video. I had said that I wasn't. If you haven't been studying for QuickBooks, you're never going to get past the final. So if you've been just doing a quick, one off the video, you might want to practice. So I've given you on Instructure, let's go to the course here. There we go. If you come down to the very bottom, I'll bring this down. I have put a sample exam here, and this sample exam is one that I actually used about a year ago. It covers pretty much everything. There's not so much inventory adjustment material on this, but it is a good indication of how long and involved the test is going to be. So what I would recommend is that after you finish homework 4, you take the test without looking at the key, without looking at the video, and see if you know this stuff well enough. And if you do, then go take the test, get it over with. So let's begin. We're going to create a new company. It's going to be a retail shop. It's going to be a sole proprietorship. So we'll get into QuickBooks. Here's our Express Starts. Alright, I'll pull this down. Homework number 4. You would use your own name. Retail shop or online commerce is near the bottom. And sole proprietorship. Okay, we'll create the file. I'll pause while it does that. Okay, we're done with creating the company, and now we need to make the adjustments. So we go to Edit, Preferences. We're going to turn on our items in inventory. So now they're active. It closes everything. Now we're going to go to our sales tax. Yes, charge sales tax. Add the item. We just call the tax name sales tax. Goes into the description. Rate is 8.5%. Tax agency. Remember, you can type directly in here if you do the quick add. So I'll show you how to do that. State Tax Authority. And it'll say quick add. Yes. And OK. Alright, and then finally, for those of you preparing to take your test in the testing center, go to General. Okay, we're going to save the sales tax. We're going to make everything taxable. And when we go to My Preferences, we're going to turn off the beep. Okay, that's important, because if you're in the testing center beeping, people aren't happy with you. But okay, we go home. Alright, we're ready to begin. Now let's take a look. First thing we're going to do is deposit $1,000 into an interest-bearing checking account at the Bank of Laie as your owner's equity, March 20th. Easy enough. Go to Record Deposits. Create the bank account first. Bank of Laie. And it's received from yourself. You're an other. And the account is owner's equity because this is your opening deposit. There are no claims on that money. The other option, it could be from a loan, in which case you would say from account, and it would be a long or a short-term loan that you would give somebody. And the amount is $1,000. And we're going to go March 20th. Okay, everything looks good. Save and close. Yes, that's okay. And we're done. So now we check the box and we go to the next one. Create purchase order number 1 to Caltex for an assortment of red 100% cotton t-shirts. Okay. Tire price of 100 shirts is $634.75. All right, purchase order. And let's try that quick add again. Caltex, quick add. And then we're going to, let's see, the date is the 21st. And our inventory is t-shirts, essentially. We don't keep track of all of them. So the part number should be something, I haven't given it to you. But we're going to keep it a little simple here. I'm trying to teach you reconciliations this time. But I want you to think of what would happen. If you actually did have 100 pieces of inventory, you'd have all different kinds of sizes. They'd have all their own costs. They'd have all their own sales prices. You're not going to sell a small baby size for the same size as a triple large. So what we're going to do is we're going to put the cost, everything on one inventory part. Okay, and the cost was $634.75. Right there. $634.75. You need an income account, but we're not going to set a sales price because essentially we're going to be selling them at a later time in this exercise. Now, if we were going to be selling these shirts and actually going forward with that, we would probably have to figure something out, but you'll see how it'll work out. Ignore all. Doesn't like t-shirts. Okay, we'll just put a quantity 1 here because we're buying one big order of 100 t-shirts. 100 t-shirts. And if you read the directions, we're going to fix these things up, and we think we can make some money selling them at Kahuku football games. Okay, brings up spelling again. Ignore all. Done. Alright, so on March 30th, you receive the shirts and pay the bill by sending out check number 1 today. Okay, so we receive inventory with the bill. It's now the 30th, so we're going to mark the 30th on our bill. The bill doesn't come with any, let's see, Caltex. There's a purchase order. So there's all our information. There were no terms given, so we'll just say due on receipt. And this is the bill for 100 t-shirts. There's no shipping or handling or anything we need to add here on the bill. So we will save and close the bill. We can change the terms. Terms are due on receipt. I'm sure we can have them show up next time. So now we follow the line here. We don't need to enter bills against inventory because we did the bill when we received inventory. You'd go to enter bills against inventory if you received them without a bill. Okay, so now we're going to pay the bill, and we're going to check the box. We're going to make sure the date is the 30th. Good. We're going to assign a check number. Pay $634.75. Pay the bill. Check number 1. Check numbers are important in this exercise, so be sure you got that. Alright, we're done with paying the bills. Now it's April 2nd. The Bank of Laie sends you your first checking account statement showing that you have deposited $1,000. You've received some interest, they've deducted service charges, and you have a closing balance. You've only written one check, and it hasn't cleared your account. All of that information is necessary to doing a reconciliation. In a reconciliation, there's the icon, which is in the banking area of your desktop. What we're doing is we're going to match the transactions that QuickBooks knows about to the balance that's in your bank. So your bank sent you a statement, we'll say April 2nd. April 2nd. We'll change all of these to April 2nd. And the bank says that you have $997.62. So we enter that, 997.62. Now, that does not match our account because in our check register, if we go to our, well, I can't do that right now, our check register would say something different because we know we wrote a big check to Caltex. Service charge $250, and the account for that is helpfully already in the system. bank service charge. Interest earned was 12 cents. And that account is an income account, which is not present. So we add new, go to other income, but before we type anything, see if it has it in the examples. And it does. Interest income is there. So you can save a lot of typing. Save and close. Okay, our screen is now ready to go to the next step. In the next step, we tell QuickBooks which of these things, these either deposits or checks, have actually been recognized on the statement. Caltex hasn't, so we can't check that one, but the deposit is on the statement, so I check it. So that's an item that I've marked cleared, and once I do it, my difference is 0. That's the difference between QuickBooks and my bank. When that's 0, we have successfully reconciled. We'll get the successful reconciliation screen eventually when my computer gets around to it. If that difference was not 0, you would immediately leave and check, because 90%, oh, I don't want to buy online banking, thank you. 90% of your errors are found on that sheet where you entered your bank statement. Okay, odds are that you entered 80 cents instead of 8 cents or something like that. Now, for this assignment, I want you to turn in the summary report. So you'll display the summary report, and then you'll just save it as a PDF. So I'm saving it as a PDF, so I'll say QuickBooks for summary, and this is the March statement. March reconciliation detail. I could put spaces in there, but I'm not. Oh, and it was the summary, sorry, okay. Reconciliation summary is the one I want because the detail has just unnecessary stuff in it. Alright, so we've got that. And now we're going to go back, see where we're at. We've reconciled. Okay. Write check number 2 in the amount of $100 to your art major roommate who prepared the designs. Choose an appropriate expense account. Alright, so we're going to write a bunch of checks here. And this one's going to go to your art major roommate. He's going to be a vendor because he's doing business with you. Okay. Now, when you do something, he was, if you look back, he's preparing artwork for t-shirts. This is a direct inventory expense. So we're going to put it in an inventory adjustment account temporarily until we can figure out how to put it in the full inventory. Okay, so I've taught you just go to an other expense, call it inventory adjustment. Okay, and we'll save and close. And Art Major Roommate gets $100 on April 5th for preparing artwork for shirts. Okay, now we're going to write a bunch of checks. So rather than go do 5 separate inventory adjustments, let's wait till our inventory is completely ready for sale. Because until it's ready for sale, we're going to be making new adjustments. So we will save and close. Now we have to get a ride to the beach. Bum a ride for some of you just means that you've asked somebody to take you down to the beach. All right. So we go down there. You're going to take your shirts to a printer. So we're going to write 2 checks. One check to Printworks for $125, and another check to Steve Jensen, he's your friend, for $25 for the gas. So write checks. First check is to Printworks. Okay, Printworks, okay, and this is going to be an inventory adjustment. I think it was $150. Let me double check. Oh, $125. $125. Printing t-shirts. All right, April 5th. Nope, it's April 8th. April 8th. Okay, and we have a second one that we're going to do on that same date to your roommate, Steve Jensen. Okay, Steve Jensen. And he gets $25 for gas, but that's a direct expense of taking the shirts. Cost of taking shirts to printer. Cost of taking shirts to printer. Not an expense, it's inventory. So we'll save and close. Alright, so now we have check 4. So now on the 20th of April, we're going to rent a car, pay another $50 to Hertz to go get the shirts. Alright, so we'll write check on the 20th. Check number 5 to Hertz Connect. And we're going to write the inventory adjustments. And the amount of the inventory adjustment is $50. And this was cost of picking up shirts from printer. Cost of picking up shirts from printer. Alright, so we will save and close. I think everything's good. The 20th, 5th, good. Alright, so now we get back with the shirts and someone tells you there's no more Kahuku games for the season. So you got a bunch of shirts. They're pretty much worthless. What are you going to do next? So I'll pull this down. We're going to reconcile our April 2013 checking account statement. Okay? So we come down here to reconcile. And it's our April statement. I think it came on May 3rd. So we'll change this from May 2nd to May 3rd. May 3rd. May 3rd. Our service charge was $250. Our closing balance was $85.45. $85.45. And then we had 8 cents of interest. Okay, again, 90% of the errors are right here. So we'll continue. Now, we need to know which of these 5 checks have actually cleared. I tell you that. Checks 1, 2, 3, and 5 have cleared. So I check 1, 2, 3, and 5 have cleared. And my difference is 0, which means it was a successful reconciliation. Taking its time. Okay, I'll pull this down here. So we're going to do a summary report for May. So here's the May summary report. I'll go up to File. You can't see this. There we go. File. Save as PDF. QuickBooks for May summary reconciliation. Done. Okay, now I'm going to go back to what we're doing. So now we're going to sell our entire stock of shirts to a young entrepreneur from Kahuku High that agrees to just give you $300 in cash because you've got all these shirts ready to go, but there's not another football season for a year, and of course you're going to graduate. So this wasn't good thinking, bad business. Your friend Steve Jensen says that he lost his check. You write him check 6. You do not collect any sales tax. Okay, now let's figure out how to do all that. So let's handle first the sale. We're going to create a sales receipt because it's a cash sale. And I'll pause. Okay, we're going to sell to our kid in Kahuku. We'll just call him the young entrepreneur. Did I spell that right? If not, sorry. And he is going to buy our t-shirts, which we have helpfully kept all together. Now, at this point you think, what is our t-shirt worth? And then you remember, oh, I'm sitting on a bunch of expenses that I haven't adjusted to my inventory. So let's get out of here real quick. No. And let's go to inventory. Well, before we go to inventory activities, how do we check how much? Because we wrote all those checks. So we go to reports. We'll look at our income statement. And we'll go from January 1st to, I think we're at April 20th now. Or not April, we're in May. Let me double check here. We are May 20th. Sorry, May 20th. And we refresh. There we go. And it shows that we have $300 worth of inventory adjustment. So I have to put that inventory adjustment into the inventory before I do the sale. Otherwise, the cost of goods sold will be messed up. So I go to inventory activities. I go to adjust quantity and value. I'm going to do purely a value adjustment. It's going to be May 20th. And we're going to use our predefined adjustment account as inventory adjustment. And we're going to use our t-shirts. Right now it says that we have $634.75 of t-shirts. No, we have to add $300 to that. We have $934.75 worth of t-shirts. Say, to add costs of artwork, printing, and delivery of, well, it wasn't delivery, it was, yeah, I guess it was delivery. Delivery to the printer and back. Alright, save and close. So now we go back, do our cash receipt, and we're going to pick the young entrepreneur. It's the 20th. He's paying us cash. He's giving us buying one. He's buying $300. So I'm just going to enter $300 there, but we're not going to pay tax on this because he's not an end user. It's a wholesale transaction. I don't know if Hawaii law allows you to do that or if what I'm teaching you how to do is an under-the-table transaction, but in California, that wouldn't be a taxable transaction. Okay, so you've just given him the t-shirts. I'll just call it get rid of inventory. You're just liquidating. You want out of this business. You made some poor choices, so you're going to take what cash you can get and get out of here. So we'll save and close. And it wants to spell again, so I'm just going to ignore all. And this time I go right to the bank and I drop that $300. There it is. Okay. Now we had another problem. We had Mr. Jensen who lost his check. He wants a new check. So I'm going to go to my checkbook and I'm going to write him a new check. But before I do that, I'm going to go over to his old check. I'm going to right click on it and I'm going to void the check. Voiding the check means that if that check ever came up again, it wouldn't be cashed. Basically, I'd call the bank and say, if check 4 comes, ignore it. And when you void a check and save it, it gives you this option. It can do a journal entry and a reversing journal entry to keep all of your accounting accurate. Because in accrual accounting, this check, the actual journal entry that happened when you gave him the check should stay put. You don't undo it. So I'll set yes. If you're a cash basis person, then you probably do it differently. So now we're going to go back to the checkbook and we're going to write him a new check. And it's going to be inventory adjustment, $25, to replace check 4, I think it was. Alright, so now, one last thing to do. We're going to reconcile for May. So we hit the reconciliation. I'm going to bring this down here. It's now June 2nd. Oh, it's a Sunday. What do you know? Okay. And our closing balance is $357.99. Our service charge is $250. and our interest earned is 4 cents. So I'm going to continue, and we know that we put the $300 in the bank. Somehow it didn't get on the bank's statement. Sometimes they hold checks, you never know. And this check number 6, we know that cleared. So now we've got a difference of 0. We've done everything correct. We reconcile. And we need that summary report. Okay, so now we have the summary report for June. I go up to File, Save as PDF, QuickBooks for June Summary Reconciliation. Alright, and finally, that was your last transaction. So we now go to Reports, and let's do the profit and loss. And we'll just stay, we started in January and went till end of June. There we go. Now, so we look at it, you should see 0 inventory adjustment. Okay? The interest income was minor, the bank service charges were minor, the cost of goods sold was correctly $934. So we lost a ton of money, essentially. There's your net income, $642.01. So I'm going to save this one as QuickBooks for income statements. And I'm going to go look at my balance sheet. And I'm now in, I think it was June 2nd. Here's the balance sheet. Now all we've got left to show for our $1,000 that we invested in this business was $357.99. Okay, we started with 1,000, we lost 642 of it, but fortunately we sold all of our inventory at the last minute and we got some of it back. There are all of your sheets. You'll upload those to be complete with homework number 4, and you have until April 9th to take your QuickBooks test. I encourage you to practice. Practice with a friend. Take that practice exam. Make sure you can do this by yourself without a video before you go take the test. Good luck.